Hi, everyone. Thanks so much for having me. It's a true honor. Thrilled. I'm Kristov Paulus, founder of Kultura Capital Management, fund that I launched in February of last year. I'm excited to talk to you today about Robinhood. And to be perfectly clear, not that Robinhood. And furthermore, I am not the CEO of Robinhood. And while we can agree, Vlad Tenev, CEO of Robinhood, has unbelievably great hair, that has nothing to do with my recommendation today. So in terms of our investment process, we look for hyper-competitors. These are organizations that build products faster, have incredible vision. They're run by leaders who will run through walls. And at the bottom of the slide, you can see some of the organizations that we have identified and worked with in the past. We believe that these types of companies are structurally underestimated by Wall Street, and I'm here to tell you why we believe that Robinhood is a hyper-competitor. So I'm talking about all this organizational excellence. That might not be your first impression thinking about Robinhood. I think a lot of people, when they think about Robinhood, think about the GameStop scandal. Vlad ended up speaking before Congress, testifying before Congress. But that wasn't always Robinhood. This was an incredibly innovative company from the very get-go, employing some of the smartest and best engineers in Silicon Valley, where I'm based. And we've seen a big part of our investment process is speaking with former employees and the people to understand how these organizations make decisions, how they assess opportunities. And in those conversations, we've seen tremendous organizational change from that period of GameStop. This one conversation mentioned it felt like everything was falling apart back in that era around the GameStop. They realized they needed to be more careful. And fast forward today, our conversations are saying that they're combining the smartest engineering leaders with the best ops and finance folks all around. Another conversation joined in 2022 as the stock was tanking and the company was a mess. We grew from 300 to 3,000 people with no structure. Fast forward to today, they've restructured all their business units under general managers, and they're executing at just absolute breakneck pace, shipping incredible product. Another conversation talking about how they were shipping features rather than holistic strategies. And fast forward today, gold, which is a key initiative, it's finally coming together. And leaving you with this one, in 2021, the company could have used more gray hairs on the executive team, which I think is a fair assessment. And fast forward to today, the product vision was always there, but now the execution and organization have caught up. One of the hallmarks of a hyper-competitor is product velocity. This is one of the things that we look for. And if you look at the early time for Robinhood in 2013 to 2020, they were tremendously successful, shipped unbelievable products, gained 10 million users in short order. And then when the whole GameStop debacle happened, they grew overnight, scaled overnight, had 22 million funded accounts in June of 2021 when that occurred. And fast forward 18 months later, they'd really only added less than 1 million total accounts and weren't shipping product. Now, in the last 18 to 24 months, that has entirely changed. And this organization is executing better than they ever have before, and we see many different ways that they can be successful. And this isn't just culture side. We're seeing this show up in business metrics as well. You look at their customer retention rate in 2021 of 80%. Now their last 12 months customer retention rate is 95%, in line with best-of-breed enterprise SaaS. You look at the net new deposits when they had this massive inflow from the GameStop situation. In the last 12 months, they've added their organic net new deposits are more than 2x that period. They went from the negative net promoter score, customer satisfaction score, to an 18 NPS. And while that's not a heroic number, that's actually the second highest NPS across all brokerages, second only to Interactive Brokers, which isn't really, it's a very different market. Great company. So For our philosophy, it's not enough to have a hypercompetitor. We pick our spots and try to find situations where we see both quantitative and qualitative asymmetries. Quantitative asymmetries, I think, are pretty well understood. Good risk rewards, healthy valuations, but qualitative asymmetries we see very often mispriced. And what I mean by that is like situations where more things can go right than go wrong. And chief in that, I believe that Robinhood has tremendous qualitative asymmetry. Chief in that, the biggest piece, there is $84 trillion of wealth transfer due to happen over the next 2 decades in the US from the baby boomer generation to millennials and Gen Z. And even if you exclude the top 2% of assets, assume those go to private banks, and real estate, that is still a $30 trillion opportunity, and they are less than 1% penetrated in that. And like, who is going to benefit from this tsunami of cash that's coming here? When you look at the number of accounts for millennial and Gen Z users, Robinhood has nearly 2x their closest comp, or roughly 14% of all millennials and Gen Z. Comparing that versus a Schwab, just as an example, Schwab, roughly teens percentage of their users are millennials and Gen Z versus Robinhood at 75%. And we see many ways that they can close the gap with incumbents. You look at their assets per funded account, it's roughly $9,000 today versus Schwab at $157,000. But those numbers are advancing rapidly. Assets per account grew 58% year on year in the most recent quarter. And even more impressively, the new account transfers are coming at roughly 10x that level at $90,000 per account. So we think this is going to be a durable tailwind for years to come. And we believe this is a situation where many things can go right. Obviously, this is not a macro immune business. They derive interest income. But we see multiple different ways where those risks could be mitigated. Talked about the growth in assets per account growing. Another big opportunity for them is in crypto. They get roughly 40x higher take rates from crypto per dollar traded versus equities, so it's massively accretive to their business. And they're still underpricing Coinbase at a 2/3 discount to Coinbase's pricing for consumers. They're entering new verticals like retirement, which is in excess of a $10 billion assets, growing 100%, users 100%, asset 140%. They're very early on in international with 150,000 customers, but they're making the investments today to enter those markets. We actually don't even really factor this into our model. It's sort of a free option. And on top of that, they are actively buying back stock. They've bought back roughly $600 million worth in the last 3 quarters, and they have 2% of the float worth remaining in their existing buyback. Adding all this up, as we look at their ARPU, we think versus today, that can roughly double into 2028. And to put that into comparison, that would still only be half of Schwab's ARPU per user. In terms of valuation, the traditional players trade at 17 to 24 times PEs, 0.8 to 3 times PEGs. And when you look at Robinhood, the business metrics for Robinhood are just far superior than any of the companies on that, growing 51% last 12 months revenue growth, 60+% EBITDA margins, and we believe there are multiple reasons why their incremental margins are even higher than that. So a couple caveats. Fortunately for Kultura, this is our largest position, and it's up 30% in the last 5 days. Unfortunately for this presentation, all these valuation numbers are no longer 100% accurate, but we still believe this is a highly asymmetric opportunity. Roughly 26 times off 12 months EPS. In our base case, around 12 times earnings. We think in a bull case, this is 10 times. And even in a macro situation, a more negative macro situation, this is quite reasonably priced. And assuming this trades below a 1x peg, we still believe this is a 3 to 6 times risk reward. And again, like underwriting this business as a hyper competitor, this is betting on the organizations that are more likely to surprise us to the upside with products that not even we are thinking about. So with that, Thank you very much.